Hello traders, it's Sunday morning, July 23rd. I thought I would get a video out early today. Each one of these videos starts with a review of our previous pick. How else are you going to get a feel for how successful this systematic trading approach is if I don't show you what's happened in the previous videos? If you watch 6, 7, 8, 10 of these videos, you're going to see a lot of consistency because this method works. Then I'm going to take a look at the market. We'll see what news events lie ahead for us in the week to come. Then we're going to find another trade that's consistent with our market opinion. NTRS was the pick from last week, Northern Trust. Now, I am looking for something specific right now. We've got a lot of news coming up. I'll get into that in just a little bit. So I'm really not looking to chase stocks that are breaking out to a new 52-week high. I would rather find a stock over the course of the next 2 weeks or so, while all these earnings announcements are coming out, that has put in a nice base and that has been able to rally through technical resistance and that has recently announced earnings and had a favorable reaction. NTRS fit the bill on all of those fronts. Here you can see these are the major moving averages, the 50-day, we've got the 20-day, we have the 100-day right here. I did want to see that 100-day moving average hold. You can also see the 200-day moving average up here. Got plenty of room for this stock to run. I loved this horizontal breakout. Was resistance, now support. So I'm going to be referring to 76.50 as support the rest of this video. So we also had a number of trend lines that were breached. So I'm going to take off the moving averages just so that we can make it a little bit more clear. And I'm going to go in and use our trend lines. Here you can see the stock bumped up against one of the trend lines, and that was the high. So it has backed off, but we wanted to see the price action on the retracement be very stubborn. That tells us that buyers are still there. This stock doesn't go straight up or straight down. It's herky-jerky back and forth like almost every other financial stock. But you can see that once that trend, this is an earnings announcement here, be before the open, once that trend is established, the stock has some follow through in that direction. In this case, I believe the follow through is going to be to the upside. But since we had this big earnings gap up, well, the stock doesn't usually make huge moves like that, but the stock moved from $72 to $82. That is a big move. That's a 10% move on this stock. So now you're going to see a little bit of profit taking. We want for sure the open of this long green candle to be preserved because that coincides with this horizontal support. So I don't really care. It can come back and backfill in here, but if the market is going down, I want this stock to be very, very stubborn because that tells me that buyers are still in there supporting the stock. It'll retain its relative strength. And then as soon as the market finds its footing, this stock should continue to climb, and I would expect it to get back to this high. So that's the approach. I like this stock. What we were mentioning in the previous video, by the way, please go back and verify this. Watch the video. These are the instructions that I gave you. Right now, we are not buying breakouts. We are waiting for those breakouts, identifying them, looking for high, heavy volume, and then we are buying dips and we are setting alerts, in this case, based on LRSI. If you're not familiar with this indicator, I have an entire video dedicated to trading LRSI. On an H1 basis, a 1-hour basis, we wanted LRSI to pull back. This is where the video came out. So no, we were not in here buying it. LRSI had to drop below 20, and then it had to rally back above 20. And this is where our alert would have been triggered. So yes, you could have bought that. This is a nice entry point. I like it. The market has been a little bit soft. I believe that we could see a little bit more softness into the FOMC statement Wednesday. We'll get into that in just a little bit. So how would you approach this trade? Pete told me he likes NTRS. Stock pulled back. I get this alert triggered. Now what? What should I be expecting out of the stock anyway? Well, first of all, if we take a look at what the stock has done recently, do I feel that the stock can get back to $82? Yes, based on the price action that I've seen this week and the earnings reaction, yeah, sure. It's been there before. Why wouldn't it be able to get back there again? It's already cleared that path higher. Now I just have to wait for a really good entry point. Well, if that is my opinion on the stock, and if I feel the market could be a little bit choppy but not going to be falling apart, then what I would be looking for is a spread that coincides with that nice big rally. And so I would buy the $80 call and sell the 82.50. That's a call debit spread. And right now you can see that spread is trading for 70 cents, bid offered at 95 cents. Well, 80 cents is in the middle. Yeah, I would be bidding 80 cents for that spread. What could it possibly be worth if the stock does get back up to that $82 price level? It would have to rally 2.5 points to get back to roughly that price level. This is an easy method that you can use. Well, where is an option debit spread currently trading that is $2.5 lower? So just remember, we can buy this for 80 cents. What I'm going to do is I'm going to click the 77.50, and we're going to be Actually, I'm going to click on the bid because now we're going to be unwinding that spread and selling it. And you can see that that spread is 125 bid, offered at 145. Okay, well, if we bought it for 80 cents, can we get out for 130? Yeah, we should be able to get out for $1.30. Okay, that's a 50-cent profit on an 80-cent debit. That's better than a 50% return. And this would be the August 18th expiration cycle. That is how I would approach the trade. So you've got plenty of time, and August 18th still gives the stock a few weeks to find its footing and then to start grinding higher. So that's a review of our previous trade. There's really no reason to have done anything super fast right now. I had mentioned in that video, this is a slow mover. I feel that a lot of times traders will avoid slow stocks. They want to trade Tesla, they want to trade Nvidia because those stocks move in big chunks. Well, there are lots of opportunities for some of these slower moving stocks. So just be patient with your entry and really try and nail that entry at a good price. NTRS, I still like it. So let's go in and take a look at what the market's currently doing, and we'll do some market analysis. We've got to get our market bearings. Market first, market first, market first. So what have we seen here recently? Well, we've got a couple of days here where the market has not been able to advance. And I've discussed this in the chat room. If you take a look at all the price action in the market, this market is trending higher. We've got a nice trend line right in here. We can see it very, very easily, but it's not in go mode. The one thing that we don't have to worry about right now is having the rug pulled out from underneath us, as we did a year ago when the market was in a bearish trend. So yes, we should be favoring the long side, but you can see that every time that the market rallies to a new relative high, there's a pullback. Rallies to a new relative high, there's a pullback. Now this breakout right here, we've had better momentum. The market has rallied 10% in the last month or so. That is a big move. But even then, pullback, rally. Now here we have a compression, so this may not be a pullback. This is a compression, but the nice thing that's a little bit different with this compression than all of these pullbacks is it was 3 steps forward, 2 steps back, 3 steps forward, 2 steps back. In this case, it's 3 steps forward, no steps back, compress, 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 compress. That's actually pretty bullish because that tells us that buyers are supporting this breakout. They want in on this breakout. So they never can really knock the market down. There's not that heavy of selling pressure, profit taking. Buyers are the aggressors, and then now we get a nice rally. So when you get these liftoffs here, this is where you get this burst on that breakout and you get a nice surge. The temptation for most novice traders is, oh my God, buy, 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 buy. Oh, this is great. The market looks so good. Well, it does. This is all bullish price action, but then, oh no, here we go. The market's rolling over. Now I'm going to be wrong again. This is just a big buying climax, so I'm just going to take my losses and get out. This is exactly when you should be buying, is right in here. This is not when you should be exiting your longs. So when you get these big rips like this, okay, you got a compression breakout. Are we going to roll over? I don't know. Are we going to break out? I don't know. Well, as soon as you find out that you're going to be breaking out, you get a doji here, which cleared that resistance. Now you get a nice bullish trend day in here. Yeah, I'm going to be pretty aggressive in here because that breakout happened on heavy volume down in here. Okay. We get a bearish trend day, excuse me, a bullish trend day on heavy volume, bye bye bye, bye bye bye. Now, this is where I'm going to get more aggressive, and this is where I'm going to consider taking some overnight swing trades. And you get some nice follow through in here. Okay, now the market's starting to stall out. We tried to make a new high, and the market closed on its low of the day. Well, the swing trades that I'm entering here, I should take some profits on it. 3 steps forward, 2 steps backwards. So now I've taken gains on them, and I'm waiting to see how far the market pulls back. Well, when the market pulls back like this, it's not going to look fantastic. In fact, it's going to spook a lot of people. And they want to buy this. They don't want to buy this. So when the market pulls back, what should you look for? You should look for mixed overlapping candles on what? On light volume. Because the sellers really aren't that aggressive. It's just a light round of profit taking. And then you get this nice big rally off of that low, another bullish trend day. I bet it coincides with that candle. Let's see, June 30th, June 27th. In any event, you get this nice bullish candle right in here. Okay, cleared that previous high. This is a nice little entry point. Do you have to go gonzo with bullish swing trades? No, but this is pretty encouraging because this dip gets you back on that longer term trend line. Okay, so you start adding to your swing trades. Everything looks good. The gains from this bar have held. So now you're adding, and now the market starts compressing up near a relative high. Okay, I should probably take some chips off the table. Do I have to exit all my swing trades? Not here. Maybe here I start taking gains again. Oh, there we get another dip. These are your buying opportunities. So up in here, when everybody's all excited and go mode, this is where most traders are loading up on their bullish positions and then, uh-oh. So please, this is the mentality that you need to be in with this current market. When you get these compressions and a nice breakout, this is where you start buying and this is where you start scaling into your long positions on confirmation. When you get these blow off rallies, this is where you have to take profits. Go to cash, then you evaluate, what does this dip look like? Big, long, red stacked candles on heavy volume. Well, I'm not going to buy that. I'm not sticking my head into that news. Choppy, overlapping candles, stubborn bid on the way down, light volume. Yeah, I like that because it tells me sellers can't get anything going, and it's just a matter of time until the market finds support and then gives me another leg higher. So this is where I'm more aggressive with my buying. This is where I'm more aggressive with my buying. This is where I'm taking profits. So hopefully that's going to help you trade this market. The mentality that most people are in, here's what most people do. I know I've been there before. It's like, I just can't figure this market out. Oh, this is so frustrating. Yeah, everything. We had this breakout. We had this nice uptrend. Buy, 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 buy. Oh no. Here we go. It's going to roll over. I just know I'm always on the wrong side of this stuff. So it's just going to keep selling off. I might as well just salvage what I can out of the trade and I'll just regroup. Dang it. There you go, chasing again. So they start exiting in here and then they watch the market take off without them and they think, gosh darn it, if I just would have held on to what I had, I would have been okay here. And so the really big mistake that some traders make is they start shorting this and they go, oh no, now we're going to start rolling over and the market's going to sell off and there's all this negative news out there on inflation and whatever wall of worry the market is currently climbing, and they actually short here, or they try and get cute and short up in here. Well, what that does is it's a giant distraction because number one, you're contra trend trading. And if you're a novice trader, you should not be doing that. Go with the trend. And you get short in here, you start adding to your shorts because they're working out, and then blam! Uh-oh! Well, you're trading against the market trend, so you better not overstay your welcome. Most novices do. Then they get their butt handed to them, and now they've got losses because they try to get cute in here and they try to predict a market top instead of just being in cash. Cash is a position. Wait, wait, wait. All right, I like this price action. Very stubborn, mixed over light lapping candles on light volume. I am ready to buy as soon as I see that support. Now I'm getting in. See you later. Okay, we're starting to stall out at that relative high. I'm taking profits on some of my overnight swings. All right, now I'm going to get back in here, but I got to make sure. So just one little positive day is maybe not enough to get me interested, but now we've got some follow through in here. Yeah, I like this. Oh, now we're gapping through resistance. I can get long. But up in here, you're starting to take gains. So very choppy market conditions right now. The other alternative is, we haven't done a lot of longer term swing trading that spans, let's say, 4 or 5 weeks. We're going to be getting into more of that because now we're fairly confident that the market has established support and we don't have to worry that on a 1 or 2 month basis we're going to have the rug pulled out from under us. So we're getting into a seasonal period right now that's a little bit soft. So let's talk a bit about that and how we're going to use that information to our advantage. So if you take a look at what's happened traditionally. Okay, this is the S&P 500, and this is a daily chart that you can see how in 2020 we were just starting to recover from COVID. And you can see how during the month of August and right up until September, the market put in a pretty nice rally. In September, the market starts to show some weakness. We have a broken up trend line, and then we get follow through selling on the downside. Yes, there was a nice shorting opportunity in here. Key phrase, once technical support was breached. Not before. We are not picking a market top here. We're not picking a market top here. We're not picking a market top here, although that's a pretty daunting candle. We're waiting for that breakdown. Get the breakdown. Oh, failed bounce. Okay, here we can add to the position. Down. So this is 2020, COVID, August, rally, weakness, September, 2021. 2021, market was in go-go mode. We're really rallying pretty hard because we had gotten through COVID. Everybody was expecting the economy to reopen. So very bullish price action, and the Fed had not started raising interest rates. You can see from July until September, market rallied very nicely. Upward sloping trend line, breakdown, weakness in September. So 2021, we still had a bullish market. You can see Shorts tend to be very passive into mega cap tech earnings because those giants have been leading the market rally. Well, this week we're going to hear from Meta, Google, Amazon, Apple. Actually, Apple is in a week and a half. Microsoft. So we'll hear from four of the big tech giants, and then we'll hear from Apple in about 10 days or so. Until all of those mega cap tech earnings are out of the way, shorts are going to be relatively passive. Well, hey, last year was a bear market. So, what happened in a bear market? Did we rally in a bear market? Well, this is the price action in July and August of last year. You could see that, yes, even in a bear market, so this is about mid August, right in here, the market staged a really nice rally. So, I think that we're going to continue to push higher before we find that short-term top, but I'm also aware that as we start getting later into August and early into September, that there is a seasonal factor in play, and that is typically when we start to see some profit taking. So right now, I would still keep your longs on a fairly short-term basis. I wouldn't be looking to go out there and initiate swing trades that you're looking to hang on to for a month or two. Keep it very short term, stick with overnights, maybe 2 or 3 day swing trades, ride those, and then watch the price action, knowing that we have some potential selling coming up. Well, why would the market sell off? I mean, what's the big deal? Why is everybody going to get so concerned all of a sudden? Right now, there's really nothing to tell us the market's going to roll over. Well, we're going to get a Fed rate hike this week, Wednesday. Market's expecting that. It's going to be a 25 basis point rate hike. So the Fed has lots of breathing room. Core inflation has remained very stubborn. They've said that they wanted to pause just because they're very close to the end of their tightening cycle. And what the market has been leaning on is that there hasn't been an economic crash because of this aggressive Fed tightening. This is the most aggressive Fed tightening I've ever seen in my trading career. And yes, a lot of people, myself included, thought this is definitely going to put some strain on the economy. Well, jobs have remained strong. Global economic conditions have remained quite good, even given this huge spike in inflation and interest rates. So now the thinking is, hey, you know what? We've almost shouldered all of the Fed rate hikes, and they're pretty close. Most officials believe we're going to raise next week, and then there's maybe one more rate hike left this year, and then they should be done for a while. And the market has been able to hold up. The economy's been able to hold up. There really isn't any kind of credit crisis. The bank stress test just recently came out. Those passed with flying colors. So the Fed has plenty of breathing room. They've got the best of both worlds. They've been able to hike rates, not have that economic decline, and inflation is starting to abate a little bit. So that's what's got everybody so bullish. Is this Fed rate hike next week going to spoil all of that? No, I don't think so. But as we get toward the end of August, I think we are going to see some nervous jitters because there won't be any Fed speak, and DC, all the rats are going to leave the Capitol and they're going to go on recess. Of course, I'm talking to our wonderful politicians. And the market just tends to get a little bit nervous. They're not sure if the Fed's going to hike rates in September or if they're going to hold off. If you get any kind of little economic weakness in there, when no one's minding the shop, that's when the market starts to get nervous. Valuations, yeah, they're a little bit stretched right now, especially on the mega cap tech companies. We saw that after Netflix and Tesla announced earnings last week, we saw a little bit of pullback in tech stocks. So, yeah, they're a little bit high on the valuation side, but Tesla and Netflix really didn't have any potential in AI, artificial intelligence. That's one of the reasons that these tech giants have rallied, and it's almost impossible to price in what that future potential is going to be. So even if the earnings are a little bit soft on tech in here, I think that potential for AI is going to keep a pretty decent bid under the tech sector. So I don't think it's going to crumble like a house of cards and roll over, because this is being touted by most analysts as the next internet. Having gone through the late 90s and the tech bubble, I can tell you that this euphoria lasts for a very long time. Not all of those companies are going to make money hand over fist, but some of them will, and it will keep buyers engaged for quite a while. So the bottom line of what I'm looking at right now from a market standpoint is that you're going to have a lot of traders going on vacation. People are going to be going on vacation. Get that in before school starts in August for many states. The market volume is going to dry up. You're going to have the Fed has just raised rates. They've come out with probably some fairly hawkish statements, and we'll get through earnings for a few more weeks, and then middle of August, toward the end of August, I think we're going to start to see a little bit of profit taking, and it's just seasonal. Probably see that continue into September. So that tells us that we've got really about 3 weeks of decent price action ahead of us with a decent strong bid to it. And that's what we're going to be playing off of. That's what we played off of with NTRS. That means that I'm going to be looking for stocks that are not breaking out to a new 52-week high that have a parabolic chart. I'm kind of looking to bide my time in here, find some stocks that look like they might have put in a short-term low and that have a decent reaction to recent earnings announcements. So the video is getting a little bit long, so I'm sorry for that, but I did want to paint a picture for you on what to expect next week and what to expect for the month of August. So I'm going to go into one of my favorite searches. It is Green Royal Flush. These stocks have a buy signal across all time frames. And if I go to J&J and I look at the price action from Friday, we can see heavy volume, buy signals across the board, generally strong relative to the S&P 500. So I'm looking for these blue and green dots, and I'm going to click J&J, and then we'll take a look at what the stock did Friday. Actually, let's use a 15-minute chart because that'll be a little bit easier for us to see some of the market weakness. You can see that on Thursday, the stock rallied up, earnings before the open, closed near its high, and then added to those gains on Friday. So volume, you can see the blue line is above zero, very strong. So we had nice follow through. What did the market do? Let's put an SPY overlay up, and this is the tell. So right now, we're just looking for really strong stocks, trying to get them on our radar. Market down, 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 hard on Thursday. Stock finishes near its high of the day. Friday, market muddling around, finishes close to its low of the day. Stock inches its way higher. This is relative strength. I like this stock. So now it's on our radar. We like it. But we also know that we are not chasing, just like NTRS. We're going to be very patient. Now we've got our automated trend lines. Again, these are available in Option Stalker Pro. And you can see this is a nice horizontal trend line that's been broken to the upside. And we've got another one right here. So the stock needs to preserve this price point at about $166. That's what I'd really like to see. So let's zoom out a little bit to get a longer term viewpoint on this stock, see where everything else comes into play. We have a series of higher lows. That's nice. Upward sloping trend line, breaking through horizontal resistance. Lots of room to get up to this trend line right here. So we are not chasing a stock that is going parabolic and is in go, go mode. So everything looks good so far. Now what I'm going to do is I'm going to remove these trend lines. Again, the point is I'm trying to find that really strong stock because my intent is to buy dips. Well, 100-day moving average, 50-day moving average, 200-day moving average. Look, the stock has cleared all of those. So what else can I tell from the chart? Herky jerky price action. The stock does not. This was a nice big decline. They did have a lawsuit, talcum powder lawsuit. So that litigation was resolved, and you can see how the stock has now started to recover from that and put that news behind it. Now it's through this horizontal resistance. I'm looking for that 200-day moving average to hold. If it does, then this horizontal resistance level here is also going to hold. And so what I'm going to be doing is right-clicking, create alert. I'm going to select LRSI again. I'm going to be using a 1-hour time frame, and I'm going to be looking for the stock to be above that 20 level for LRSI, and I'm going to add this, and because it's already above 20, I need it to go false and then true. I'm going to show you this. First, I'm going to save this alert so that I get it, because this is going to be a good trade when it sets up, just like NTRS. So let's go here. Let's zoom out. Let's take a look at how LRSI works. So LRSI, when the indicator is above 80 and it crosses below 80, that is a sell signal. And you can see how it gradually drifted lower, and now when it got below 20, the selling pressure accelerated. It is not a buy signal until LRSI gets above 20, which it did right in here, which that is a really nice entry point for a long. Now, when the stock gets below 80, it's above 80 in here, plateauing, gets below 80 right in here, that's a sell signal. So you can see LRSI is above 20. What I want it to do is I want it to cross above 80, and it will, and then I want it to go below 20, because when it goes back above 20, that's where I'm going to get my buy signal. I want to buy dips. That's what this whole video has been about. I want to identify those strong stocks. I like what the market's doing right now. I want to buy dips on strong stocks. And when the stock does dip, I want this herky jerky mixed overlapping candles on light volume pattern, because that pattern tells me that the pullback is not that strong. Buyers are still engaged, and that's why the stock can't stack red candle, red candle, red candle, red candle on heavy volume. Buyers are still in there buying. And so I'd like to see this horizontal was resistance, now support, hold at the 166 level, and that's also above the 200-day moving average. And so what happens when a stock gets down to the 200-day moving average? Any asset manager or trader who missed this big move up is going, hey, if it ever gets down to the 200-day moving average, I want to buy some. And when that mentality starts to grow, now everybody's bid at the 200-day moving average, and they're thinking, yeah, you know what, I'm watching this stubborn price action on the way down. I don't think I'm going to have a chance to buy it at the 200-day moving average. It's never gonna get there. So I start buying here. Oh, stock's starting to reverse and tick higher. I better buy some more here. I'm not going to get any more on my trade off. So they start increasing their bids. And that's why stocks that never test these support levels confirm it in an even bigger way, because it shows just how anxious buyers are. So watch for a little bit of a pullback. Watch for some nervous jitters ahead of the FOMC statement this week. Watch for that stubborn price action coming in on J&J that tells you that buyers are still there. The only reason the stock is pulling back a little bit is because the market is a little weak, and because the stock does not typically make monster big moves like this. big moves like that attract a little bit of profit taking. But we want that profit taking to be minimal, and we want to watch for those mixed overlapping candles because that tells us it's not going to pull back very far, that buyers are still in there supporting that stock. And then when the market finds its footing, FOMC statement comes out, everybody takes a deep breath, everything's great. Oh my God, AI is going to be the next internet. Mega cap tech stocks are going to eventually rally. They may see a little bit of softness for a week or two, but generally August, as we've seen in the charts, tends to be pretty good. Earnings season should be pretty good. So we should see that decent market bid. And when we get that, you'll have bought a dip on J&J, good price, and we expect J&J to continue to moving higher. Where's your price target? Minimally at that high, which is about $171. So if you can buy the stock somewhere in here around the 167 level, beautiful. You get $4 of upside in that stock. Then you could start looking at all sorts of call debit spreads. Perhaps you even feel like you can sell some out of the money bullish put spreads. That's how you would approach the trade, very similar to what we did in NTRS. Sorry, the video took longer, but I threw a lot of information at you. You might even want to watch this video twice because I hit a lot of different concepts, including the market and finding these individual stocks, and then setting alerts to help you identify these dips and the pullbacks. And then, most importantly, what is that price action on that dip? Is it stubborn? Is it a wimpy dip? Does it tell me that buyers are still in there? If yes, then I know I'm going to have a great candidate and that support is going to form, and then whoosh, the stock is going to take that next leg higher. And that's how I want to approach it instead of buying these breakouts. Thanks so much for watching, everyone. I should be doing a video Wednesday. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.